Hi, I'm Mitchell Joseph. I'm not a financial advisor. Everything is for educational purposes, so nothing's a suggestion, but I will be sharing plays that I'm in, plays that I'm looking at, and just dropping a few jewels. But let's recap of the last trade I showed you guys. So go on the chart real quick. You guys remember this chart? If you don't remember, go back to the video that I dropped yesterday, and you can see that I first played this break of this purple line. So this is an example of an A plus setup. You know why it's the A plus setup? Because you have support. Support is the floor, right? So you have the floor diagonally through this brown line, and you have the floor horizontally through this purple line. So once it broke both supports, it's like it broke through the floor. And guess where we're going? Down. So I hopped in the trade off that signal, and yesterday I was able to play most of this red bar. So yesterday I showed you guys what this equated to in options. Basically, options that I bought for $40 went to about 112. So now this is what happened today. It gapped down. So from here so it closed at 55. It opened at 53.9, 53.95 cents. So that's already a good dollar almost, in the gap. And you might be, oh, it's only $1, but no, with options, $1 is all you need. Like, especially if you already got some already. So let me show you what that equates to in premium and profit. So I held the ones from yesterday and I sold them today. And this is the price. Hold on. Right here. So you guys can see right here. Let me draw a little bit because this could be a little confusing. Bear with me. So trade price, that's how much I paid for them. I paid $39 for them, right? And when I say them, I should say for it, because it's one, right? Normally I buy multiple contracts, but I want to size down to really practice discipline. So, and it's very important because it's not about the money, it's about consistency in the process. So I bought them for 39, and then by the opening bell, they went to 155, and I sold them for about 150, you know? So basically this was I don't know how many times. I'm not gonna do the math right now, but you could do the math and see how many times. I think about 277% profit. I cheated. I remember seeing it on my Weeble. But so that's AA, right? So I'm gonna continue to watch AA. Let's go back to the charts. I'm gonna continue to watch AA because we're at a key level right now. And if you guys know anything about candlestick patterns, this is a head and shoulders. So real quick, here's the shoulder, here's the big ass head. I'm sorry, excuse my language. And then here's the shoulder. So at the end of the day, if you know how to play this, you play at the neckline. We're right at the neckline, and depends on if it breaks this or not, this can continue chopping down, or it could bounce up. Let's just see what it does tomorrow. All right. So that's one play for you guys, right? And I'll show you options later, but keep that in mind, AA. And then SPY is the other one. So so before you go into the options, you just want to look at the chart, peep the levels. But as far as levels, if AA does break tomorrow, levels that I'm interested in playing, they would be basically coming to this support level right here. So I know it's not a straight line, but 47 around this support level, that's the next support level if it breaks through. But there's also a gap to fill right here, which is maybe around the $50, $51 level. These are not straight lines, but you guys see the picture. And whatever I would do, I'll put my stop loss at the top of this gap right here on 55. So let me make it easier for you guys instead of drawing all these lines. All you gotta do is come over here and select your play. Right here, actually, short position. So I would do it like this. Put it right here. Put my stop loss in here. I would get in right here. Put my stop loss right here. My target, what I say, 47, I think I said. So right here, that'll be my first target. Second target will be down here. So We'll get into the options after, but those are the targets. You guys can see the video after if you want to get these levels. There's a stop loss, entry, target. And that's a good, at least a 2-to-1 ratio, 2.5-to-1. That's a good win to risk to reward ratios. And then my other play at the gem I'll give you guys will be SPY. I'm already in it. All right. Let me take away some of these not to confuse you guys. Get rid of the Fibonacci's. If you want to know what Fibonacci's are, come to class. Boom. And did I draw these? Hold on. There we go. All right. You guys can see these levels pretty clearly, pretty crisp. These are all daily candles. So this was yesterday during the day where things, notice when SPY went down, so did AA, so did many other companies. But this gap down, a lot of other companies gap down, and this gap down was massive because SPY, which is S&P 500, which is the market, it closed at 401, but then it opened at 394. That's a good 7-point drop overnight, not to mention the drop that this bar did itself. So top to bottom, you can see how big of a range that was. You know what I mean? So now the options are these right here. Let me stop sharing. Hold on. Put the options. Here we go. These are SPY ones. That's not SPY one. Right, all right. Oh, is this SPY or is it the wrong one? Hold on. I think this one is SPY. Yeah, this one's SPY. All right. So as you can see right now, I'm down, and understand that this is a really good idea. Whenever you're losing in the play, it's very helpful to share it because now it offers somebody else a better entry. So for example, I got into these at 64. Right now it's going for 48. So I'm down $33 because I have 2 contracts. But mind you, these expire June 17th. So next Friday's expiration. So if you have experience playing options, this is a recommendation. But if you do not have experience playing options, you do not have any business playing this because it's a weekly expiration. It's very short. If you don't sell it, you can lose all your money. Basically, I said it. But if you know how to play, then you know to see profit, you take profit. All right. So that is the play. Now I'm just going to show you the play on AA, and that will be my pick and my free play. So now let me go to Thinkorswim. Thinkorswim. All right. Go to Thinkorswim. All right. So just so you can see, right now I have some options on AA. This is my demo account, by the way, guys. So don't get too crazy. But as you can see, I bought these the same day when I bought the AA, but I held on to these a little longer. But I bought these earlier, so I caught them at 42, and right now they're sitting at 217. So out of 5 contracts, you'd be up 877. But other ones, you know, I bought a couple other puts like more in the money. So notice these are more in the money, and you see what they're going for right now. Like this one's the most in the money, and you see $400 turned into 12 from the $65 put. But now, as far as what to do now, let's look at AA. So the thing about AA, I will tell you, you do need a little experience playing these because they're not the most liquid. But you have to just look for the most liquid. And the thing is that as it moves in your favor, it becomes more liquid. That's just the way it works. As it moves less in your favor, it becomes less liquid. That's just something about options to understand. So right now, they're looking fairly more liquid, especially now they're getting all this attention. So, but they were not looking at this yesterday, I promise you, or the day before. So now I said, we're looking for puts, and I said around the 47, but this is given 1 week, so I would not get these. I would put in an extra week just to be safe. You know what I mean? And I would look at these right here, the 45s. So when you put more time, you can go even a little bit more out of the money, but these are liquid enough that I can do something. You know what I mean? 50, 55, that's not too far. It's 7 points, but if you take 5.7 as 10%, it's less than 20%. So that's basically how you know whether it's liquid. But just come to class. I'm not gonna go into it. So this is the option right here. You if you go to buy it, this is how you do it. It's gonna cost you $54 per contract just for educational purposes. I'm gonna buy 2. You know what I mean? I'd say if you're starting off, buy 1, because you gotta be okay with losing this $50. You can't need it for your bills. So now I put in that order, right? So now if I go to monitor, you'll see my order right here for this $45 put on Alcoa expiring June 24th. That's my free play. Now make sure you gauge your entry, make sure you know your exit, and make sure you get in at the best price possible. And if you're wrong, put your stop loss, because nobody knows what's gonna happen in the market, all right? And this is not a recommendation. This is what I'm playing. Feel free to play with me, but know how to play it too. And that's it, logging off. Creative Minds with your Joseph. See you guys on Monday. Thank you.